In this video, we're going to talk about MULLEN, trading under the ticker symbol MULN. If you want to hear more about MULLEN or other stock analysis videos, then please make sure to like, subscribe, and to comment down below. Now, MULLEN is an EV manufacturer that has been very popular with retail traders for a prolonged period of time because initially of its battery technology and the volatilities as well as the news announcements that this company has been able to make in the past. So what happened was almost out of the blue, people are suddenly intrigued by this company that seems to come out of nowhere, even though it was one of the oldest players in the field. And then because of the short-term trading results that people have had with MULLEN shares, more and more people tuned in. In fact, people still tune in from time to time to see what it is what is the current situation with the company, to see whether there's a chance that the stock will redeem itself back to where it was, which is a very slopey slope because it's almost like 100 times over where it stands now. Seeing MULLEN in its current stage is probably painful for many investors who have put money into this company. But at this point, I do believe that the bulk of the good news, unfortunately, might be behind us, as far as the company itself is able to generate. I'm not saying that the bulk of good news, overall, is behind us, because that has a lot more to do with things that are external. What lies ahead will possibly be a whole bunch of higher volatility waves and the likelihood of profiting from a quick trade. So currently the company is still treading water, and there is no indication of whether they will be able to make it in the end. The company is fighting lawsuits to discourage people from shorting the shares, and I think that those efforts will not necessarily yield anything significant for us to see. Of course, it did something, it created some movements or some noise way back, a few months ago, when they first announced that they would start investigating into what's happening behind the scenes. Now, MULLEN is a company that, keeps bouncing around, with each low being lower, unfortunately, than the previous one. And each lawsuit or announcement having more, despair seeping through. And this is my overall impression at the moment. I think that this impression is probably going to go on for a little while until the overall environment of EV shares and tech stocks start to change. That being said, let's take a look at the technicals. The trading volume of MULLEN has recently been around 60 million shares compared to the average volume of 51 million shares. Over the previous 52 weeks period, the price fluctuated between 20 cents and $132.32. The volume of shares traded tells us how many shares are being bought and sold at any given point in time, and if there's enough liquidity to support a trading strategy. With a very thin float, it would be very easy to influence the stock price, but the low liquidity can mean that the demand is limited too. When we compare the current volume against the average volume, there might be the possibility for trend reversal or breakthrough if the difference is very large. For instance, if the stock were to break through, the current volume would be significantly higher than the average volume. The market cap of MULLEN is currently around $36 million compared to an enterprise value of around $17 million. As we compare the current price to the historical price fluctuations, the stock is 3% higher than the 1-month low, 3% higher than the 3-month low, and 3% higher than the 50 weeks low. On the options market, which often gives us a hint about the market sentiment, the implied volatility is around 344% versus a historical volatility of 165%. The put-call volume ratio is currently around 11%. It is normal for most stocks to also tend to have a higher put option volume than what they deserve because many institutional investors hedge their long positions by buying put options. The most recent volume of options traded is 12,000 contracts a day versus the 30-day average of 13,000. Regarding the open interest, the most recent volume of open interest is 953,000 contracts versus the 30-day average of 961,000 contracts. In terms of the shareholder structure, institutional shareholders own 3.3% of the overall float, which likely represents how much faith they have into the company, as well as some lent shares for the short selling. The biggest shareholders include Vanguard, BlackRock, and iShares. These are essentially the typical ETF funds, so it doesn't really mean that the market has a lot of faith or no faith. Usually, these ETFs are agnostic when it comes to most shares or companies in a market. They tend to own some of this and some of that, and this is probably one of those. Usually, it's always good to see some institutional participation when holding a stock long term, because it does offer a layer of stability and reliability in the long term. In the case of Mullen, though, I personally don't believe that there is much of any. At the moment, Mullen is purely viewed as a short-term, trading position for speculating on the volatilities. The current short interest is around 13% of the total float. 54% of the transactions come out of the dark pools. Usually, if the short interest is above 15% of the total volume and a significant portion of the short volume comes out of the dark pools, it may suggest that there are institutional positions taken to short the stock and that there would be potentials for a short squeeze. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Overall, if your intention is to buy Mullen, then it's crucial to accept the concept that it is a company that may not be listed on the Nasdaq for long and could even have solvency problems in the upcoming years. The one redeeming factor that I see within it is its capacity to create irrational movements within the retail shareholders and to create opportunities in the short periods of times. In the meantime, I believe that Mullen is currently looking for a support region and that an entry might be possible in the upcoming weeks. Now be very careful. This is for the people who are willing to tolerate a very high risk. Otherwise, it's better to stay away from it and to look elsewhere for better opportunities. I would recommend to commit overall between 0.5 to 1% of your portfolio in Mullen, and would also recommend to split the allocation in batches of 20% at a time over the next 3 to 6 months so that you can purchase more in case it retraces further or back down.